Welcome to another episode of Commercial Property Roadshow. You're here with Helen Tarrant, and today I'm going to actually talk about rent risks, right? So here I am in Chinatown. You can see, so we're here in Chinatown, and you can see that this is really interesting because you can see the properties down below, these properties, and then you can see the apartments up above. So I want to talk about rent risk is that there's a significant difference with ground floor level properties compared to upstairs. Now in Chinatown, it's one of the biggest differences, and the reason for that is downstairs you might be paying say maybe 100 grand for a property for a little shop front, but upstairs you're paying something like 20-30 grand for a much larger office space. And it's interesting because there is no lift. It's a pretty old building, and it's a destination type tenant that goes up there, or it's basically a tenant that someone can find, and it's an essential service of some sort, and usually they do training colleges there of some sort, or English colleges and things like that. So it's very, very different. You can see that rents can vary differently, and obviously also parking, the amenities are also different. This is why it's really interesting when you are assessing risk in terms of your clients to think about what are the rent risks, right? Can your tenant, example here, we're looking at a cafe here. This is a Hong Kong cafe. It's not open now, it's open from 1 p.m. till 11 p.m. And here we've got an exchange trading. When you walk through Chinatown, you're gonna realize half of these shops are not actually open in the morning. Now you're thinking, okay, well, how do these people how do they get enough rent, right? For example, a place my son's just been in the other day, where we're looking at people grabbing toys, right? Here, it's a gaming machine, like gaming machines and things like that. So, and it's really, there's no one here in the morning, right? They're in the morning, but in the evening, it's absolutely packed. And it's like that, but you got to think, can they actually generate 100k worth of rent, right, to pay the rent, not only today but for the next 3, 5, 10 years when they're in the actual lease? So that's an assessment you make, right, and you do it on a benchmark to see, right, relatively the other type of similar businesses, are they paying similar rents, are they and that comes from knowing the market, that comes from just understanding how businesses work, and you might need to consult a business broker who understands these metrics. But typically having that understanding and seeing that key locations, foot traffic, how that relates to rent and how that makes that work in terms of longevity for your tenant is really, really important. So when you are looking at rent risks, one of the things we look at is market fluctuation. So at the moment we have downward pressure on rent, which means that everybody, especially the CBD, are having a downward pressure on rent, 30 to 40%. So if you want to rent a property in Sydney Metro CBD, you're going to get the best rents right now, right? That means that for the next 3 to 5 years you could have really great rents locked in. Now that's not going to be great for property value, but eventually that will bounce back as well. But considering a few other different aspects is that sometimes if you're in suburbia right now, there's upward pressure on rent. So there's a lot more people who want to rent in suburbia than there's places, and as a result of that, you're going to be paying a higher level rent, sometimes higher than CBD. At one point in Sydney, the rents in Cabramatta, which is a predominantly Vietnamese driven demographic, were paying much higher rents than even in Sydney CBD because of the foot traffic. Now, if that is one of the risks that you identify, you got to see, how does the foot traffic impact your tenant? Are they dependent on it? Are they a destination tenant? Because these are the things that when you are doing due diligence, you need to check. Now, they may be perfectly fine there. There may be a particular type of specialist, there may be particular allied health, or there may be, in the Asian culture, there might be a particular type of eatery. So we've been places where they're serving a particular type of donuts, they're serving a particular type of Asian foods, like particularly that Hong Kong cafe I showed you. This place here, they do like Malaysian noodles and grilled, like this one. They apparently are for their laksa, so people actually come to them as a destination tenant. So those tenants, they're probably paying 20-30% less rent than if they were paying that right in the middle of Sussex Street. But because of the tenants that come, that the quality of the food they serve and the quality of their customers, they need to be in that location, but also they would probably be able to afford $70,000-$80,000 of rent. And you're thinking, hell of a lot, Luxa, you're gonna have to sell at $20 a bowl, right? But they can absolutely sustain it. So these are some of the assessments and considerations you have to take into account when you're doing your due diligence. But again, each and every business is different. Each and every commercial deal is different. This is why I create these videos. This is why I want to share with you what to look for, what to avoid in commercial property, and why you need an expert to handhold you, because when every deal in commercial is a live deal, and we need to talk through each and every one of the risks. If you don't understand the other risks, please go back and watch my previous videos. Please also tune in to see my next 3 risks, which we're going to be covering markers, we're going to be covering yields, we're going to be covering locations. So we're going to be covering all of that as well in the upcoming videos as well as I'll be taking you to Adelaide next week as I travel there to scout out the market. So reach out to me, helentarrant.com or helen@commercialpropertycashflow.com.au. Let's get on the strategy call. Let's build you some passive income through commercial property, and let's get going. Keep hunting, keep building your portfolio, and let's talk.